Hey everybody, this is Ray Halstead and your CFO, Andrew McMillan. Today we want to go over the balance sheet, what it is, what's on it, and why it's important to a small business owner. Again, I've got Andrew here with me. Andrew, what can you tell us about the balance sheet?
Yeah, so I get asked a lot of questions about the balance sheet. And first off, the balance sheet is really just a snapshot in time of the financial picture of your business. So it's going to be made up of what assets you own, like what you own, who you owe money to, and then what's left over as like the shareholders' equity. So that's the big pieces of the balance sheet.
As far as those three sections, what exactly falls under each one of those sections?
Yeah, so kind of going a little deeper here. So what you own, what you owe, what you own are going to be your assets. So this is going to be the cash that you have in the bank, accounts receivable due to you, inventory that you may have, any equipment that you have, vehicles, large purchases that you have that help you produce the income that you're trying to create. Those are all going to be the assets of your business. And then next you have is who you owe money to. So those are going to be your liabilities. So that's going to be your credit card debt, any accounts payable that you might have, any loans that you have. Those are going to be your liabilities. And then what's left over is how much equity you have in the business. So that's your shareholders' equity. And all that really is your assets, subtract your liabilities, and then what's left over is your shareholders' equity. And it just shows the amount of equity you have in the business.
So why is it important for small business owners to not only have a balance sheet, but to understand a balance sheet?
Yeah, I mean, balance sheets can be tough to understand at times and really understand what it's trying to show you. So at a high level, if you don't get much else from this video, the biggest thing is make sure that your liabilities are not more than your assets. If your liabilities are not more than your assets, then at least you're trending in the right direction. That's one of the first things I look at is try to understand what kind of debt the business owner may have, what they're dealing with that might be strapping them with cash, and make sure that those liabilities are not more than their assets. If there are, we just need to understand why and try to figure out a way to kind of dig out of that. Because if your liabilities are more than your assets, that means you have some negative equity in your business, and it just may not be as financially secure as it could be. So we help try to put plans together to making sure that they stay balanced on that balance sheet.
Well, that's really good information, Andrew. If you're a small business owner and you want a deeper understanding of the balance sheet for your business, feel free to give us a call and we'll help you out. Thanks.